Hello and welcome to Crux Investor. We caught up earlier today with Dan Wilton, CEO of First Mining Gold. They are listed on the TSXV. We caught up with them last March and we talked about some of the things that they've managed to achieve in 2020, their PFS, which came out today, and plans for this year and the optionality around the cash that they've got in the bank. If you want our thoughts and opinions on the conversation, their plans, the PFS, or indeed the company, you can find that at cruxinvestor.com/club. We can also find detailed company reports. There's commentary from experts from around the world on a variety of companies and commodities. There's also training courses on there to help you with your own diligence process. We've got summaries of other interviews that we've done just to save you some time. Of course, there's a thriving community of investors sharing their thoughts and ideas with each other in a nice, safe environment, free from trolling, abuse, or judgment. Isn't that nice? So try that at cruxinvestor.com/club. And we'd love your feedback too. So do give us a like. It would be appreciated. And also give us your comments. We do try and get back to absolutely everyone. And if you want to see what we talked about today, take a look in the description below. Dan, how are you doing, sir?
I'm very well, thank you. Great to see you again. It's been a long time.
I was about to say, long time. Yeah. I think we're March last year, the beginning of March last year. We hadn't got a clue what was coming down the line. Not a clue.
Just a different world. I think I'd just come back from the beach. And, we're on our way to PDAC, where, if you remember the days when 30,000 people could gather and shake hands,
never again.
It seems like a lifetime ago.
Never again.
Anyway.
Never again. Yeah, you come back from Miami, if I recollect. But so things have obviously changed a lot. We're going to talk about, your company, but also the pre-fees that's just come out as well, and maybe talk about some of the other assets. But how's life changed for you, working wise?
It's been an extremely busy year and obviously stressful for all of us. But I think kind of coming into the pandemic, we were lucky that we just raised a little bit of money in February and early March. So we didn't have to panic. We were able to kind of, keep people focused for a period of time. But it really sharpened our focus on what we needed to do. Nothing sharpens your focus like not being able to leave your house. So, we got really busy April, May, and June and ended up announcing a few really important kind of transformational transactions for the company, including selling our Goldlund project to Treasury Metals. We're now a 40% shareholder there. We'd optioned our Pickle Crow project to a great partner, Auteco Minerals. They've got a 45,000 meter drill program out and hit some amazing results at Pickle Crow this week. So, we're very excited. They're moving that forward. And, we raised a bunch of money by partnering with First Majestic on a silver stream, which really gave us that confidence. And we talked about this last year. We needed to simplify the portfolio and give ourselves that runway of long-term funding. It gives people confidence you're going to get to the finish line. And so we kind of did all of those in the middle of a pandemic when we couldn't leave our house.
Yeah. So you definitely took advantage of the situation. Yeah, I mean, I do want to talk about those things because that's my memory when I was doing the research for today was, looking back at the conversation we had, there were a lot of moving parts, not necessarily a lot of cash. And I guess the market wasn't really kind of understanding the story and there's a bit of focus required. And I think that's what we're going to hear. You've ticked off a lot of boxes. But hey, a lot of new people have joined us since we last spoke. 60,000 subscribers now. That's so it's kind of a bit nuts. But there's also a lot of new generalist investors coming in here. So why don't you kick off? Give us a 1-minute overview of the business. What are you? Not necessarily the sales pitch. And then I'll pick it up from there and we can go through some of these points you want to talk about today.
Absolutely. Well, First Mining Gold is a gold project developer with a core portfolio of assets in Canada, really centered around our Springpole project, which is one of the largest undeveloped open pit gold projects in North America. And we just announced pre-feasibility study results on Springpole this morning. So we're very excited about that, declared reserves for the first time. And then the balance of the portfolio, like I said, we've got some strategic investments. We have our Cameron project, Hope Brook, and our assets in Quebec kind of round out our Canadian portfolio. But really our real focus and where we're going to see the most value is advancing Springpole through the environmental assessment process and getting it permitted.
Totally agree. Okay, great summary. So for people new to this, you're Canadian focused developer. You're focused on Springpole. You well, as you mentioned, you did a deal with First Majestic on a silver stream there. Talk through the highlights, what you think the highlights are of the pre-fees and what we should be focusing on.
Well, lots of highlights that come out of this. These things are a result of an enormous amount of work, from fundamental data collection to analysis, some really thoughtful engineering from all of our partners that were involved in this. But the real highlights are this is a project at long-term consensus gold prices of $1,600 that shows just shy of $1 billion US NPV after tax. That number pre-tax is $1.5 billion. After-tax IRR of 29%. And importantly, this is one of few projects in the world that is capable of producing in excess of 300,000 ounces a year. In the core part of its mine life, because you kind of mine for 9 years and then process some lower grade stockpiles at the back end of the mine life. But in the core part of its life, all-in sustaining costs sub $600 is how it's scoped, putting it in the lowest quartile of the cost curve in a tier one jurisdiction, and trading at values that are a fraction of the values of other developers out there. So we think it's a really, really compelling story. And importantly, we made some really important additions to our team that I think can give our investors comfort that, we have the people to be able to take the project through this EA process, and we're very well funded to get to that finish line.
Fantastic. Okay. It's a nice looking PFS. I'm hoping it gets people at least looking at you, because an ASIC like that, say wherever you are in the world, that's a good number, right?
Yeah.
And the NPVs are quite attractive, but with that comes some problems, right? Because it's a big number. It's going to require a big CapEx number. So should we just go through some of the things that you've got to be looking at now to move things forward? Okay, so pre-fees, need to move on to feasibility study. You're going to need some cash. So talk through your cash position at the moment. I think you've indicated you've got a bunch of it. How do you spend it?
We've got about 35 million on the balance sheet today. With this announcement, we actually get another 7.5 US from First Majestic under our silver stream transaction. We've still got a number of First Majestic shares that we haven't sold yet from the first tranche of that silver stream transaction. So kind of cash and marketable securities, call it, is kind of between 50 and 60 million right now. So we're very well funded from that perspective. And then we have these strategic investments that over the longer term, if we needed to find liquidity, no hurry to do it now, but over the longer term provides that flexibility, because the value of our stake in the Pickle Crow project, the value of our shares in Treasury Metals combined is about $140 million right now when you actually look through at how those companies are trading. So we think we'll leverage some of that value to make sure that we have the financial flexibility to move the project forward in an appropriate way.
Right. Okay. So you've got some optionality on the cash side in terms of how you tackle it and the period over which that cash could come in, and obviously say you could leverage it now. So that's great. One thing you can't control so much is the EIS component. So what's happening there? Because no one's going to walk in and buy this thing off you unless that's nailed down.
Yes, so I think that's, we're working very hard. And the most important thing we've done is added really significantly to our team on that front. So we had hired Steve Lines, who joined us in December as our new VP Environment and Community Relations. And Steve, prior to this, had spent 6 years permitting the Hard Rock project, Greenstone Gold Mines. Hard Rock just sold to Orion and ultimately Premier to Equinox in order to develop that project at a value that would be multiples of what Springpole is valued at inside First Mining. So it gives us some real sense of where we can see some value lift. But more importantly, it's amazing. When I started here 2 years ago, every investor said, why do we need another 1 gram ore body in Ontario, right? Like, we've just had Rainy River. It's such a problem. No one's ever going to build Côté. No one's going to build Hard Rock. No one's going to build Magino. Well, lo and behold, fast forward to today, 2 of those projects, Côté and Magino, in construction, and Hard Rock's been bought for a value of about 600 million US and going into construction. So I think it really demonstrates that if we move this project forward, that value is going to come. And we now have a team, and I think a team with really fresh, recent experience in permitting projects like this in the same jurisdiction, relationships with the regulators, a real understanding of how we find win-win collaboration with our communities. And that's a really important part of what has to happen moving forward. But yeah, timeframes are the one thing that if you look at what's been impacted by COVID particularly, and absolutely understandably, our communities have had a number of other priorities, particularly the health and safety of their community members, and getting where we would normally do consultation with community meetings and presentations in community halls. We haven't been able to do that over the past year, but we need to be patient, and we have to ask our investors to hopefully be a bit patient to walk with us through that journey, as we need our communities to have the time and capacity to be able to work on what I think is going to be really beneficial, mutually beneficial.
Okay, so that deadline's going back, but what's it going back to? Give us an idea of when you hope to submit and how long you think you're going to have to wait.
Yeah, so listen, you got to keep in mind, we've done 10 years of environmental baseline work on this project in aquatic and terrestrial habitat. We collected a lot of really important data around, waste rock and tailings characterization, but informed how we have moved the project forward in scoping. We removed the tailings dam, for example. We've scoped dry stack tails and waste co-disposal in this PFS, which is, I think, a really exciting change. Shrunk the footprint considerably. But I think that the goal is we would like to be able to have the project sufficiently scoped with the input from our community so that everyone's on the same page about what's going in by the end of the year. But there's a lot of work for us to do by then. And then that kind of starts the process in Ontario with submission of an environmental assessment document, Ontario and federally, which for other projects has taken kind of 18 to 24 months. So that puts us in kind of a end of 2023, beginning of 2024 timeframe for decisions.
Right. Okay. Now, if I remember where you guys came from, again, before your time, admittedly, most of this. So it was more seen as a kind of promotional type endeavor. It was a portfolio builder, and perhaps wasn't taken. Well, it has some initial success and then fell away quite quickly, right? So you've been brought on board to change this into more about the fundamentals of mining and prove that you're a mining business. Sounds like you can tick that box. I think people will take note after this PFS. But again, you still got a long way to go. So what are the things tell me, what is the end game on this? Are you guys going to become developers? Producers, I should say. Producers.
Well, first and foremost, I think we have a very good understanding of what we need to do to take risk out of the business and surface value, right? And that's getting this thing through the process. And when we get to that point, and we have the luxury of the decision and the capability to move it forward to decide if you can raise finance and build the project, if you find a partner to help you build the project. I think it all comes down to what's the environment at the time, what's in the best interest of the shareholders. And, with my background as a corporate finance professional and as a private equity investor, I know there are a number of different ways that can go forward successfully, whether it's as an independent company or as a part of a bigger company. So I don't think we're bringing any preconceived notions in. But I think what I would say is that we need to assess that at the time, and we're now very well resourced from a human capital and financial capital perspective to get us to that luxury of having to make that decision. And that means, in the next few years, it's continued de-risking and project optimization as you go through the environmental assessment process. Get a feasibility study done. You don't want to do 3 feasibility studies. So you probably have it line up with, once you've really got that project scoped and in the EA process and everyone's made the decision that this is what the project's going to look like. But we've had great partnership from a number of our technical partners in moving this project forward. So yeah, I think we're in a very good position.
Well, I think you've got the luxury because of how things have moved in 2020 and your cash position of not telling us what the plans are. And you've got, and as long as the share price keeps going up, you'll have that. But at some point, the market does like a bit of clarity about what you are, because you haven't got, mine builders in-house. You haven't got a track record of, producing. So therefore, people's expectations are you're building this thing up for sale. And that's the expectation in the market. If I look at some of the questions sent in, then the questions are, what is your timing around that? And what are the deliverables between now and that moment in time? Can you answer that?
Well, the timing on that, again, I think it comes down to how do we take the most risk out of this business over the ensuing, 2 or 3 years. And I think you need to be open to and exploring those partnership opportunities all the way along. Right now, I would say with the value that we have in Springpole, we don't need to go get any external funding to move it forward. This is not a super compelling value at which, you'd want to sell a project or necessarily even bring a partner in, but that can change quickly. And part of that is perception. And the project continues to face this perception of it's sitting, deposit sits under the shallow bay of a lake and you'll never get permits for it. Well, as it turns out, my colleague Steve Lyons has permitted projects both as a regulator and as a project proponent in the Northwest Territories that had smaller footprints and less water disturbance than Springpole. There's nothing unique about what we're doing. So Steve brings this real clarity of precedent and understanding of and relationship with those regulators to allow us to take that risk out of the project. So in the end, listen, if we get to the point where we can build it, you can find a mine building team. We've got great partners that have worked with us. But that's something that you just have to assess what's in the best interest of the shareholders at the time.
Okay. I'm trying to understand what are you going to be able to say, which is going to change people's minds enough to get that valuation to move? Because again, if I look at your PowerPoint, I think you've referred to it, the fact that you're $14 an ounce compared to a lot of your peers, but you're trading way off of some of those comps because people don't get what you're trying to do yet, I suspect. So what are the messages that okay, PFS, good start, right? You're going to have to deliver a feasibility study. How long does that take?
Feasibility study, this year we will spend doing more optimization and kind of trade-off work. I think the feasibility study, you'd likely start at the end of the year and have that progress so that it's in, a degree of readiness for as you're kind of rounding the corner at the end of the environmental assessment process, because that's when you really need it, right? You need it and bring, financing partners along with you, based on a pre-feasibility study. But ultimately, they come along the journey of the feasibility study with independent engineers. And that's, we have the luxury of time as we move that forward. But yeah, I think that's kind of the time frame. It all happens in parallel with the environmental assessment process that we're going through. But it's really important that you get community buy-in and you get a lot of that work done upfront, right? And that's where, I think you can invest time in the front end to make sure that you are saving much more time on the back end of a process if you have real partnerships and people bought into it.
Right. So what else do you think you need to do to kind of get shareholder interest? And what's your split in terms of, institutional versus the most slightly, I think the retail audience are not quite there yet with you. Certainly that's what we're seeing. So
yeah, I think, you alluded to it before. I think they were at one point and now we have a huge retail shareholding. And a lot of really dedicated, retail and high net worth shareholders who are very supportive and very active and great evangelists for us. It's wonderful. Our institutional shareholding base has grown from, almost zero to kind of 15%, 16% over the last year to 18 months. And I think that's something where as we demonstrate that this is a real project, as we demonstrate that this is something that we believe we're going to be able to get permitted, as we demonstrate in the milestones that we're making progress and that we're financed and have the capability to get the project to those critical value milestones, that's when people have to believe. And ultimately, listen, there's going to be a big portion of the investing public that's going to say, you're never going to get that permit. I'm not going to buy the stock until you have the permit. So how do you change their mind? You get the permit. And you have to be prepared to play that long game. But I think if you look in the history of development companies that have gone down a permitting process, it's very rare that it's a binary move, right? As you take risk out of the project and achieve milestones in a permitting process, people tend to believe it more, as there's not real objection to it, and you've done good science and scoped a really good project, then I think you should be able to see that value start accreting. And right now we're still trading at the, I don't even want to listen to the story, level. And I think declaring reserves in a pre-feasibility study is a pretty good start to be able to convince people that, this is a project that they need to pay attention to. Because when you scope Springpole against just about any other development project in the world of a comparable size and scale, like there's just not that many of them. So, and I think it compares really well. So yeah, we're excited about it, but I think I would like to think that you put the PFS out and all of a sudden everyone believes you, but I know it's a longer road than that. And the good news is we're well funded and not going to need to raise capital pretty much all the way along that road based on our plans right now.
Okay, so coming back, because like I said, I think you've done a lot of the things right, but if you look at the EIS process, let's say you submit at the end of this year, you've got what, 12 to 24 month time frame after that?
Yeah, say 18 to 24 in Ontario has been a kind of the benchmark for other projects.
Okay, so you're 3 years out from delivering certainty around the permitting, and I get that there's a big audience that said, yeah, I'd be one of them. To be honest, I've been caught out with it, so I'm definitely one of them. I'd go, I'm not putting any money down till that moment. There's a whole bunch of other stuff that you can do to remove risk, though, again, which just makes it, in terms of baby steps towards making it more palatable. So what are the other things which you think actually this may give just a little bit of comfort to people during that 3-year hiatus?
Well, I think first and foremost, it's moving forward in a positive and constructive fashion with our Indigenous and our local communities. And the fact that if we, get to a point, and certainly the perspective that we're bringing into our discussions, where, we establish real partnership, I think it's the only way that it's going to work. And, we're all learning as we go through this to a degree, but I think there is real intention on all sides of our communities to really work in partnership. So, there's still lots of discussions to happen there. And we're at the early stages of collecting community input into the project, because it hasn't, prior to the last, 12 to 18 months, it's never really been moving forward before. It's been kind of promoted, right? And we're now at a point with the financial capability, and I think the team, to be able to move that forward seriously. So I think, and there's a lot of steps we can take along the way with our communities, being collaboration agreements, and it doesn't have to be a signed impact benefits agreement, as long as we're being good partners and helping move it forward, understanding what the communities would like to see. I think that's a really important step.
Okay, given the scale of this project, 300,000 ounces a year, 11-year life of mine, AISC well below $600 Canadian. It's very attractive to some of these big companies who are looking to fill up their reserves, right? Is there any benefit in you starting an early strategic relationship with any of those kind of mid-tier and above players? Because in the sense that, could they speed up or help your EIS process because of their track record?
I think that there is certainly benefit to it. I think there's benefit to the operating experience. I think there's benefit to groups that are operating in our region in Ontario that, it could be helpful. And I've been a corporate finance guy for most of my career and done a lot of, investments and site visits and things like that. Every one of those is an opportunity for us to get someone else's perspective on the project and what they might do differently, what they like, what they don't like. I think there's a real opportunity. And one of the things that could potentially change people's minds about the executability of the project is an external stamp of validation, right? And I think if you can ultimately get that through some kind of partnership, whether it's an investment in the project, investment in the company, I think that's worth considering, because I think that brings a different sense of the scale of risk that you're not facing alone anymore. And we've seen that a number of other companies do. It's had really impactful and significant impacts on share price and on perception of risk. So I think from that perspective, it's worth considering.
Right. And that would be something that you would have to consider before you submitted the EIS, one presumes, to get their input.
No, not necessarily. I mean, it's, I think if we're doing work that should withstand the scrutiny and be to the level of quality that any potential partner is going to be comfortable with. And that's the team that we've built around us. That's our internal team. That's our team of partners and consultants who've helped us move the project forward here. I think there's been really good work done, and I think it will absolutely withstand scrutiny. But that's a perspective, and maybe I bring a bit of a different perspective, having been a private equity investor, having been a corporate finance professional for years. It's one of the reasons we brought Ken Enquist onto the team in 2019. Ken knows how to scope projects in a way that withstands the scrutiny of the pickiest of potential partners. It's because Ken kind of grew up inside Rio Tinto doing big projects, and so he knows how those things go. So it's been instrumental in delivering what I think is a really, really positive result in our PFS.
No, I've been impressed with some of the people you've brought on. I mean, that's one of the things that stuck out for me from when we last spoke. You've thought about who you would need to solve problems, and that's actually very attractive. Okay, should we park Springpole? Because I think the comment earlier about are people interested in 1 gram per ton type project? I think that question's been well answered. Multiple interviews that we've done across the year, I think it's irrelevant. This is about the margin that if the economics continue and you get it over the line with regards to permitting, it's a very, very solid and attractive project. Can we just talk about some things, the other things that you've done again, because this sort of interested me. When we talked last, I said it up front, but it was true, because when I was looking at the videos, like, we talked about some of the outliers, some of the things which just were distracting from Springpole but needed sorting. And you've gone through it. I think you'd just done the Auteco deal. It was thereabouts when we spoke, right?
We'd announced it, hadn't quite closed it yet.
Right, exactly.
That timing,
right?
Yeah.
So that looks like it's going well. You can tell me about that in a second. Also, Treasury Metals was another big piece of this. I know you've now got effectively 40% of Treasury Metals, so that's also quite attractive. Albeit both of those things are, financially beneficial at some point down the line, but that's fine because you got cash today. So how are those relationships going? Are they working out as planned?
Yeah, I'd say better than expected. There's been having brought in our partners at Auteco, who have a real. It's basically the original team was Steve Parsons and Sam Brooks, who Bellevue. Are the group behind Bellevue.
Yeah.
So a real demonstrated track record of finding high-grade gold in old past-producing gold camps, right? And so the deal with Auteco was always more about the partner than it was about the structure of the deal, which is why that deal came together so well. And them having the confidence of being able to raise the capital to really do justice to what needed to happen at Pickle Crow, because all the owners of Pickle Crow, going back to 2000 and before, never had the financial capability to do a proper job of it. But if you look at, Auteco's raised $37 million to execute our $10 million earn-in, of which the phase 1 of $5 million, they should be through shortly, like this month, hopefully. And they're in the middle of a 45,000 meter drill program and putting out some phenomenal results, which we always knew the gold was there to be found, but you need someone who's got a real capability of understanding and reinterpreting high-grade systems. And that's what these guys have done very well. So no, the partnership's been great, open, transparent, collaborative. And we're in a really interesting position there because we have a 20% interest in Pickle Crow that's carried through to a construction decision.
Yeah, I remember. Yeah.
So they're going to have to do a feasibility study and more or less have the financing lined up before they do that. On a high grade mine, which, they have to drill that to reserves is going to take a lot of capital. So we're in essence kind of getting a free ride for a period. But we consciously did that banking on the team who's there and what we think is really going to be the success of the operation. And so far, it's working out great.
Yeah.
So
Steve Parsons, good guy, and they've gone hard early as well. So
yes,
again, that's fantastic.
Yeah, exactly.
Treasury, obviously, they've kind of come back in, and you've kind of they've now got Goliath and Goldlund as part of that transaction. Why did you do that?
So listen, we did that because first and foremost, those projects are worth more together than they are apart. Two deposits 25 kilometers away, you shouldn't build two mills. That's just capital efficiency and common sense. Second, we were really getting no value for Goldlund. I would have talked about this last year. We put out 100 meters of 2 grams from surface in drill holes in a new discovery, and our share price didn't move a penny. Whereas this at least takes Goldlund and defines it in something where now when people say, what's the value of your interest? It's like, what's Treasury shares times share price, plus these really attractive warrants that we have. So it's kind of getting that transparency of it. But importantly, listen, Goldlund Goliath was going to need capital to move forward. And it's going to need a dedicated team to move forward because, with their EA approvals already at Goliath, they have an ability to move a bit more quickly than we would have at Springpole. And so look at two options. We buy them, they buy Goldlund. And when you think about that, the issue was the relative values at the time really made the most sense if we didn't dilute our shareholders of their value of Springpole. Because, we really believe Springpole was going to turn out with values like this that we have in this pre-feasibility study. So if you really believe that, you got to begrudge every share that you issue at values much lower than that. So it's been great. Put them together. Some great scoping work's gone on. Hired a new CEO. So I'm on the board of Treasury. We have 3 of 7 directors. So we've had a bit of a board refresh, and I think we've got a great complement of directors. Combination of the existing directors of Treasury and a couple of people that we brought on, and a new CEO, Jeremy Wyeth, who's doing an amazing job. And Jeremy has a great background of mine building in Ontario from his time at De Beers, where he built the Victor mine. A great track record of building win-win relationships with the communities around which they operate in Ontario, which I think is super helpful. But they're coming out with their own kind of first real peek at what the potential economics of a potential combined Goldlund Goliath will look like, and I think it's gonna be pretty compelling. Would be my sense. We've always kind of thought 1 + 1 = 3 with this deposit. So
yeah, well, and I think both of those, both Treasury Metals and Auteco, solid management teams. Do you know what I mean? You sort of see companies like yourselves with portfolio approach, and you're like, oh, let's do a farm out, and the first person that comes along with the promise of money, and it just kind of sits there and doesn't do much for years. I mean, come on, you've been in corporate finance, you've seen that a few times. It's nice to sort of see how aggressively they're both tackling that. Again, just sort of dealing with some of the other kind of outlier type things. Cameron, I noticed that you've taken the opportunity to grab a little bit more land there. But are you doing anything on that, or is that still a little bit?
Yeah, we're very actively scoping an exploration program at Cameron. Before we do that, we need to advance some agreements with our local and Indigenous communities in the area, but have had some really constructive discussions there. And with this new larger land package, there's a couple of really interesting opportunities of kind of the age-old story. There's a deposit on our side of the property, there's a deposit on their side of the property, and there's no drilling in between them, right? Because it goes up to the property line. So I think for us to look at, what could be some really interesting regional exploration outside of the main Cameron deposit, I don't think we include any of the other projects as resources right now. So I think there's an opportunity to add some reasonably attractive, probably upfront smaller, but nearer surface resources at Cameron, and think about how it ultimately comes together as a project, be that processing as it is, or be that ultimately, you've got what I think are going to be 2 mills, Treasury advances. From Cameron to the Treasury mill site by roads is about 100 kilometers. Cameron to Rainy River is about 90 kilometers, a little bit less than 90 kilometers. So, I think this resource as we define it, demonstrate more exploration potential, because there's a ton of gold there that really is begging some drill holes. So we're going to scope and then hopefully execute, $2 or $3 million drill program this year, and a bunch of regional work to work up more targets and some really, really interesting structural targets that have never been drill tested.
Perfect.
It's exciting.
I did want to talk about drilling separately, but just let me finish off on the thing. So Hope Brook, we talked about last time. That is what, a deal waiting to be done? Or are you just going to let that sit for a while?
I think when we look at the portfolio, Hope Brook does kind of sit geographically as a bit of an outlier. And it's a great project in what is now one of the hottest jurisdictions in North America for drilling, right? You look at the number of people who are picking up exploration projects in Newfoundland. The difference between ours and theirs is that ours already has a 1 million ounce resource on it, and it was mined for 8 years, and it's got a power line to it, and it's on tidewater, right? Like, there's so many advantages to the Hope Brook site. So, but it's one of those things that for us, as we look at the other opportunities, are we going to spend money drilling at Cameron? Are we going to spend money drilling at Springpole, where, that exploration success beside where you've got a $995 million NPV, that can be really interesting. And the reality is Springpole, we've not really talked about the exploration upside, but Springpole sits on the edge of this Birch-Uchi greenstone belt, which the way that we talk about it is, if the Red Lake camp has seen $1 of exploration, the Pickle Lake camp's probably seen 10 cents, and the Birch-Uchi's probably seen a penny, right? Like, it's really underexplored, but very similar rocks to all of those. 4 or 5 past producing, from the 30s and 40s, past producing high grade mines in the area. Really interesting geology. And I think there's a real opportunity for us, and not just us, a number of other people have started doing work, within 10, 15 kilometers of Springpole. But the center of gravity that we're going to have with Springpole, I think, is going to enable a bigger regional strategy at some point with the leverage to that exploration success. So We're watching a lot, and we're actually going to get drills turning on Springpole for exploration targets for the first time in a long time.
Right. So you've obviously got a lot of cash. You got all the cash you need, and it certainly get you way into the process for feasibility study, possibly get the feasibility study over the line, do you think?
Yeah, I think depending on your assumptions about us ultimately potentially turning some of our strategic investments into cash. Right now, our cash plus the value of our strategic investments is about $200 million. Right.
So you're good.
We're okay.
We're okay. Yeah. No one's going to be struggling for gas. Right. So talk about the exploration in terms of numbers, please, if you don't mind, because you said where you could go, but give people an idea of how active you're going to be. Because, when people hear the word EIS and crikey, it's a very desk-driven process. So are people out there doing exploration? How much more drilling do you think you're going to do? What's your budget for this year?
So a budget at Springpole is about 10,000 meters, which will be a combination of some infill and metallurgical drilling, because we're going to go through another round of metallurgical optimization. I think there's still opportunity to get the recoveries higher at Springpole. We're excited about that. As some condemnation drilling, where last year we were in an area doing condemnation drilling and stumbled across some pretty interesting geology, which we're now going to go and test this year with some exploration holes, both kind of near the Springpole project, and then ultimately scoping a few holes elsewhere in the land package. But we have a massive land, it's 40,000 hectare land package at Springpole, right? There's lots of room for expansion there. But, I think we prioritized a number of targets, but call it 10,000 meters. And at Cameron, I think we'll end up, we've set a $2.5 million budget, but that's probably somewhere between 5,000 and 10,000 meters, depending on the holes that we end up drilling and where they are and how deep they are. But I think our priority really is testing a number of the near surface targets, better understand the structure, some real regional geology which may not see drills this year. But that's kind of the pace of exploration on those two. So I think both of those have amazing leverage to exploration success in a way that you just can't get that leverage in a traditional greenfields exploration.
Are you going to get distracted at all? Because you've got a lot of cash there, and a lot of cash optionality there. I think there's a real a lot of desk work and a lot of engineering and a lot of consultancy work. And so it's basically process driven, not necessarily a ton of, 10,000 meters isn't too bad, but it's, you're not going to go nuts on the drilling. You'd still have a lot of cash. Having accused you of perhaps having too many assets in the portfolio last time around, and you've been dealing with that. Now with all of this cash on board, are you having a second think about maybe how you come out this portfolio of yours?
No, it's afforded us the luxury of doing that. And, I think most importantly, where we've seen the real opportunity is in making the real investments on de-risking Springpole. And that is on bringing on a team, right? Bringing on Steve and his team who permitted the Hard Rock project. It's in really appropriately trying to resource the work that we're doing with our communities, and making sure that we have that runway completely funded. And interestingly, we had a board meeting yesterday discussing exactly this. And fundamentally, the strategy around some of the other opportunities around the portfolio, because there are some real opportunities here. What we never really talk about, we've got a royalty package that today would be as attractive as a number of different royalty companies that have been created. We got a 1% royalty or 2% royalty on 1.5% on Goldlund that can be bought down to 1% for $5 million on a project that's, we're going to see a pretty interesting scoping on it with, line of sight on production. We've got a 2% royalty on Pickle Crow that can be bought down to 1% for $2.5 million US. But these are million-ounce deposits in great jurisdictions that people are spending tens of millions of dollars advancing. And we get zero value for these royalties, but I think they provide not just optionality, but also, some real value optionality for the shareholders. But the way that we look at each of these other opportunities is it's got to kind of be self-funding, right? Like, if we were going to go do something with another asset in the portfolio, we need to make sure always that we have the line of sight on the long-term game to keep our Springpole process moving forward through the EA and getting to that finish line. That is the absolute priority.
It's interesting when you talk about the royalty. It's kind of Great Bear did that. They kind of spun that out of the company for the benefit of the shareholders.
Yeah. Gold Mining's doing it too with their royalty company, and kind of finding it's a very similar thing. I think we have some very attractive royalties on that. So
interesting times. Hey, well, look, Dan, good to catch up with you. Long time. We should speak more regularly though, because you're going to be a busy boy this year for sure. We'd love to. I like what you did last year. Want to see if you're hitting all of those deliverables this year as well. So come back on soon. Pick up the phone, okay?
Yeah, we will do. Absolutely, lots going on in the first quarter and into Q2. Lots of very important catalysts. This was a really important one today in declaring reserves and scoping the project, but we've got some really interesting news coming out. Pickle Crow, really interesting news coming out. Goldlund Goliath coming out with a PEA and sometime in the near future. So yeah, I think we're going to have a bit more shape on the portfolio and hopefully be able to demonstrate some great progress at Springpole.
Beautiful. Appreciate your time, Dan. Thanks.
Awesome. Okay, thanks very much.